Ladies and gentlemen, good day and welcome to Aurum Proptech Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. I now hand the conference over to Ms. Vanessa Fernandez. Thank you, and over to you.
Thank you, Yashashri. Good evening, everyone, and a warm welcome to the Q3FY 2025 earnings call of Aurum Proptech Limited. Joining us on the call today, we have Mr. Ashish Deora, the founder and CEO of Aurum Ventures, Mr. Omkar Shetye, Executive Director, Aurum Proptech, Mr. Kunal Karan, CFO, Aurum Proptech, and Mr. Hiren Ladwa, CEO, Aurum Bizex. Today, we shall take you through our performance for the quarter and 9-month period ended December 2024, as well as our future outlook. Before we proceed, I would like to remind everyone that the forward-looking statements we may discuss are subject to risks and uncertainties that are detailed in our prospectus and the annual report. We encourage you to review these documents, which are available on our website, to fully understand the risks associated with any future projections or statements. We shall now start the call with Mr. Ashish Deora.
Thank you, Vanessa. Good evening, everyone. It's a privilege to welcome you to the 15th earnings call of Aurum Proptech as we reflect on another quarter of consistent growth and relentless execution. Q3FY 2025 has been once again about staying true to our purpose of creating an integrated PropTech ecosystem while delivering consistent, sustainable growth across all financial metrics. I'm excited to share that Aurum Proptech has continued its steady growth trajectory. We once again achieved an impressive 24% year-on-year growth. What makes this achievement even more remarkable is that it aligns with our efforts over the past 7 quarters to improve profitability margins and focus on unit economics. This is also a validation of how all our stakeholders are adopting tech as a catalyst for change. The journey we embarked on to establish an integrated PropTech ecosystem is now gaining significant traction. It is now our responsibility to deepen this connection with our stakeholders and lead the way in transforming the real estate landscape. Talking specifically about our 3 business segments, I would now like to start with the rentals. Within the rental business segment, we continue to meet the growing demand for organized rental housing through our platforms Hello World and Nestaway. Strong occupancy rates and new offerings like Nestaway Lite have enabled us to cater to more tenants and property owners while maintaining healthy margins. Also, we are seeing a trend reversal with top IT firms resuming hiring as indicated by their recent quarterly reports. This is a great positive for our co-living business as it creates tremendous opportunity for us to expand supply and drive higher occupancy. Moving on to our distribution business segment, tech remains at the heart of our approach. Developers are increasingly adopting tech solutions, recognizing the value of industry-specific AI solutions like our CRM platform Sell.do and our data analytics platform Aurum Analytica. Talking about our capital business segment, we are excited about the transformative opportunities on the horizon. We are eagerly awaiting the SM REIT license, and we are on track to launch our first asset under this model in the coming quarters. This will be a path-breaking opportunity to redefine fractional ownership, bringing more accessibility and transparency to real estate investments. As we chart our path forward, we firmly believe it is time for our products and companies to shift to a mindset of hypergrowth. Having demonstrated the strength of our unit economics, we are confident of driving exponential growth through our businesses. In the initial quarters of Aurum Proptech's journey, we focused on acquisitions and proof of concept. This was followed by a period of strong focus on unit economics and achieving profitability. With all profitability metrics showing consistent improvement, we should now aim for hypergrowth and market share expansion in the coming quarters. We are working with our business leaders to assess how they can double their product revenues while maintaining strong unit economics. Our roadmap for the next financial year is in place, ensuring that in each quarter we focus on putting one product at a time onto a hyper-growth trajectory. We are excited about the opportunities ahead and will continue to deliver value to all our stakeholders. Thank you for your continued support. I hand over to Omkar for further details.
Thank you, Mr. Devra. I'm thrilled to share that Aurum Proptech has continued its steady growth trajectory for the 9-month period ending December 31st, 2024. This quarter was about relentless focus on execution and unit economics. We achieved an impressive 24% year-on-year growth with consistent improvement across all profitability metrics. Within the rental business segment, we continue to build on the momentum from previous quarters. Revenue was up 28% year-on-year for the 9-month period ending 24 December. We now cover 33,500 rental units under management between co-living, student living and family rentals across 200 plus micro markets in the country. The blended occupancy was at 75% with young professionals driving maximum demand. Notably, Nestaway, India's largest rental marketplace platform, achieved sustained year-on-year growth for the period. Key contributors for revenue growth were improved customer experience. Nestaway ratings now improved to 4.3 out of 5. New revenue schemes, including Nestaway Lite, continue to enhance wallet share and allow us to serve a broader customer base. Continued focus on portfolio management approach, flat organizational structure, and automation of tasks with technology help control cost and unit economics. The demand for organized rental accommodations is 2 crore rental units across the country, and we believe we are well positioned to bridge this large gap with efficient, scalable, and customer-centric technology. Building on the strong performance of our rental business segment, we've also made significant strides in our distribution business segment, where technology remains at the heart of our approach. The restructured distribution business, sans services and non-core businesses, demonstrated a 55% year-on-year growth for the period. This came at a significant net margin of 18%, a validation of our commitment to profitable growth with strong control on unit economics and focus on technology at scale. The data analytics business was a key driver with 89% year-on-year growth in revenue. This was majorly fueled by larger account penetration and high retention rates across existing accounts. Additionally, new accounts also saw growth in Tier 1 and Tier 2 cities as well. Analytica, centrally operated from NCR, now serves 300 plus micro markets across the country with its data lake. There was also an impressive cost reduction in our sales automation business, Sell.Do. This was majorly done with increase in account penetration, customer wallet share, and also better control on automation of tasks. Moving to our capital segment, we continued our consultation with SEBI on SM REIT application and are fine-tuning our go-to-market in anticipation of the license, which is set to unlock a 50,000 crore AUM SM REITable supply across the country. We shall continue to build our integrated Proptech ecosystem for scale and customer centricity. I will now hand over to Mr. Kunal Karan, CFO of Aurum Proptech, to take us through the financial results.
Thank you, Omkar. Thank you everyone for joining the call. I will quickly take you through the consolidated results for the quarter and 9 months period ended December 31, 2024. First, the results for the quarter. The revenue from operations rupees 64.58 crore, total income 70.23 crores, loss before tax 9.63 crores compared to rupees 12.1 crores in the previous quarter, an improvement of 414 BPS in terms of PBT to total income. The EBITDA for the quarter 24.7% compared to 21.5% in the previous quarter, improvement of 320 BPS. Now the results for the 9 months period ended December 31, 2024. Revenue from operations rupees 193.43 crores. Total income 206.94 crore. Loss before tax rupees 35.47 crores compared to 71.15 crores in the corresponding period previous year. An improvement of 2540 bps in terms of PBT to total income. Now the segment information. For the quarter, rental revenue contributed 68% of the total revenue from operations at rupees 43.98 crores. Revenue for distribution and capital segment were rupees 17.85 crore and rupees 2.75 crores respectively. Rental and capital segment had a loss of rupees 3.65 crores and rupees 2.35 crores respectively, while the distribution segment made a profit of rupees 2.44 crores. For the 9 months period ended December 31, 2024, rental revenue contributed 64% of the total revenue from operations at rupees 123.57 crore. Revenue for distribution capital segment were rupees 58.09 crore and rupees 11.77 crores respectively. Rental and capital segment had a loss of rupees 9.01 crore and rupees 5.73 crore respectively, while the distribution segment made a profit of rupees 5.12 crore. I will now hand over the call to Yashasri to take it forward. Thank you.
Should we begin the question and answer session, sir?
Yes, please.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, please click on the Raise Hand icon tab available on your toolbar or on the QA tab available on your screen. Kindly turn on your mic when the operator announces your name. You may post your text questions as well. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from Mayuresh M, an individual investor. Please go ahead.
Thank you very much. Do you hear me?
Yes, please go ahead.
Okay, thank you for this opportunity, and I congratulate you for the great set of numbers. I also asked some questions during the last con call, and some forecast was provided of 45% year-on-year growth in FY25 for the whole financial year, and a revenue for the revenue of 300 crores until March 2025, which means there will be a revenue of 110 crores in the last quarter. Are we still confident of achieving this number?
So, Mayuresh, this is Ashish here.
Yes.
We have focused on unit economics as our metrics. We heard from many of our investors to say that look that is very, very important and very critical as a public company. We have over last many quarters, in fact last 7 quarters, improved our profitability while maintaining a very steady growth. So we are not really kind of as of now saying what is going to be the Q4 numbers, but yes, as I tried to address in my opening sort of remarks, that we are now talking to each of the business leaders that we have in our ecosystem to say how can their companies, their products be taken on a hyper growth scale. We are feeling very confident about that now with unit economics in place. So we believe that whatever growth we have shown over last few quarters, the growth in the next few quarters will surpass that as a percentage, if that helps you.
Okay, so I could assume that the next quarter the revenue would be at least 65 crores, as in similar to this quarter. At least it may surpass, but we do not guarantee the number that you had provided last time of 300 crores for the whole year.
That is not what we are saying, but yeah, if
Yes.
if I mean, that is not what we are saying, but yes, Pravesh, if you think that we will definitely surpass the current quarter revenue numbers, right? I mean, that is
Okay.
a
No,
that
no, I was talking about the target that was provided in the last con call. Like, are we still confident of achieving it, or considering the numbers are quite large that we need to cope up with for the last quarter?
Viriji, from a industry point of view, real estate being a very cyclical kind of a business, Q4 numbers are typically better in all the 4 quarters. We will definitely aim to surpass like you said, the base numbers of around 65 crores growth. And while we look at Q4 more optimistically, while we have demonstrated a consistent base number, we will definitely look to surpass that in Q4.
Okay, thank you. Thank you. And any updates on the rights issue that was planned in Q4? Will it still be coming out in Q4?
yes, we are looking to start the process in this quarter, in the Q4 quarter, and call for the rights money in next few months. But the process will be started in this quarter, as we had committed earlier.
Perfect. Sounds good. About the depreciation, I see we have like close to 20 crore depreciation in our books for this quarter and also for the last few quarters. Considering that we are an asset-light business and we don't own any assets ourselves, we rent them. We rent them from the owner and then further rent them to individuals. May I know why do we have so much depreciation in the books?
Look, the depreciation that you see in the books is not for the assets that we carry on our own. The depreciation are for the assets that comes to us as a right of use asset, which comes because of this Hello World, mostly because of the Hello World business, where it enters into long-term agreements with the landlords. And as the practice of the accounting requirement of the accounting standard, those assets needs to be shown as a ROU asset, and out of say the total depreciation of 59 crore that you see for the 9 months, around 42 crore comes on account of that. So that is not an not a asset, not a depreciation for asset that we carry. So definitely that asset light philosophy stands good for us.
But the asset is owned by the owner himself. So why do we have to put the close to 59 crores of depreciation on our side?
So that is the requirement of the accounting standard. So when we enter a long-term lease agreement with the landlord,
Yep.
that time the standard requires us to show that asset as a right of use asset, and the cost of the asset gets depreciated. That is why it is shown over there.
Okay, understood.
So there are two kinds of contracts. One is long-term contracts, another short-term contracts. Short-term contracts are where the contract expires within 12 months, and long-term where it is more than 12 months. Because our business requires us to have properties which we can keep under our control for a longer period. That is why we enter in a long-term contracts.
Okay. Thank you for the clarification. And regarding the occupancy of 75%, is it seasonal or is that the average occupancy throughout the year?
This is the average occupancy for the quarter. What is notable is that the occupancy of 75% is maintained despite the stress that the student living business went through in the city of Kota. If we take Kota out, the city of Kota, which is majorly housing student living units, if we take that out, the average occupancy actually goes up to 85%. So that's been the strength of business coming in from young professionals who are working in micro markets like Bangalore, Pune, NCR, which is also a large market for us. and Hyderabad.
Understand. And uh, last question from my side. About the units, we had a target of around 50,000 units until the end of FY26. Are we still confident of achieving it?
Yes. So we are at 33,500 rental units under management as of now. We would definitely look to scale it up to 50,000 units under management in the midterm, like we said. And in fact, our aspirations are quite larger. We would like to, in the longer term, scale it up to a 1 lakh rental units under management. Between all three
Indeed.
core, the student living, co-living, and also the family rental unit.
Yes, I noticed 1,500 units were added in this quarter, and I think if we keep going up in the same pace, increasing the number of units incrementally, this target is possible. About sorry, this is the last one. The REIT license. Any news if we could get it this quarter, or it still depends on SEBI to take that call?
Hi, this is Hiren here. Yes, I mean, you gave two answers. Both of them are correct.
Yeah.
Yes, it
Okay.
depends. Yeah, it does definitely depend on SEBI, but SEBI has its own process of going through the applications. There was industry-wide discussion also happening in the previous quarter, because of which the existing players' registration is most likely to get approved in this particular quarter for all of us.
So there is nothing pending from our side. Maybe it's just a question: is it totally on SEBI side, or are they waiting for some information from our side to process the file?
So this is a iterative process. As of now, as we speak, we have submitted our information that was required by SEBI. We are awaiting their response. If no further queries, then it should be the last leg. But again, can't comment on what exactly SEBI can come back with.
But just to add
All
to
right.
Hiren, I think the conversation with SEBI has been so transparent and so sort of forward looking. It's really very, very heartwarming, right? Despite being the regulator, despite they're trying to do something new, democratize the real estate investments, they have been very, very forward looking, and our compliments to them.
That's great.
Thank you.
That's great. Thank you very much for clarifying all my questions, and good luck.
Thank you. We'll take our next question from Yash Garg and shareholder. Please go ahead. Mr. Yash Garg, you're on talk mode now. Please go ahead.
Yes. Yeah. Now, as we are hearing about the market stagnation throughout the Indian stock market, how companies like yours, which is operating in a niche sector like Proptech, look to excel given the challenges and opportunities created by growth of AI? And also, did you consider making a D2C platform like housing.com or MagicBricks?
So I'll answer the later part first. We already have India's largest C2C platform, Nestaway, which deals on the rental management side. What we are going to definitely we are definitely doing a POC on how do we also tap onto the resale market that comes by the virtue of our visibility in the rental units. And as we are aware that the rental or the resale market is much larger than the primary sale market in India, and the opportunity to disrupt that from a consolidation standpoint, from a technology standpoint, is quite from a customer experience standpoint is immense. So Nestaway is where we are going to bank on to the C2C offering. Coming to your question on utilization of AI, we feel AI and all the new age Gen AI practices are more of an enablers, and we have a clear three-pronged strategy there. Is to first, how do we use AI to increase our top line by increasing wallet share of customers and consumers? Number two, how do we increase our bottom line by increasing the efficiency of our team structures, organizational structures, automation of tasks. And number three, how do we run new business models? Like we spoke about the C2C model for resale on Nestaway's platform. That comes by the virtue of AI, where we are able to understand the yield, the rental yield of a certain rental apartment under management, and offer it to consumers on a prompt basis to sell and for the owners to resell. I hope we've been
Yeah,
able to
yeah,
answer it.
yeah. Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please click on the raise hand icon tab available on your toolbar. We'll take a text question from Mitesh Jain from Impex International. So many companies have received the SM right license, but our license is still pending. Is there any particular issue? What's the likely time by when we can get the same?
Hiren, here again, I think we have answered this question already in terms of the timelines, expectations, and discussions with SEBI. We've already covered that.
Thank you. We'll take our next question from Vidit Shah from Spark PWM. Please go ahead.
Hi, thanks for taking my question. My first question was on the profitability of the rental business. So we've seen the losses here gradually come down over the last 4 quarters. We've seen a very sharp increase in the loss at the segmental level results from 1.2 crores to 3.7 crores. So could you please help us understand what has caused this? Is there a one-off? And how do we see the profitability of this business given Ashish Ji's focus on unit economics that he spoke about?
Vidit, your voice was quite muffled, but we could quickly decipher some parts of your question, and we'll probably elaborate it later. But from an understanding standpoint, your question was on the profitability of the rental business. We feel that the rental business is still in the, I would say, at an inflection point from a scale-up standpoint. We are between both the between Hello World and Nestaway at 33,500 rental units under management. And to reach an ideal state in the micro markets that we operate, I would say in depth, which is 5 key micro markets, we still take some, I would say, we'll still take some time to reach that ideal state. From a supply standpoint, from portfolio management teams that are managing that supply standpoint, and from the demand that we end up generating on a continuum basis in that micro market standpoint. Once that is in effect, then I think the network effect for each micro market will drive profitability at that scale. We feel that that scale should be at a 50,000 rental units under management. Of course, those 50,000 rental units will not be concentrated in 5 micro markets, but we will have 70% of the micro markets which will have an ideal, 60% of the micro markets will be at ideal state, and balance will be in the scale up position at that stage.
Hi, is my voice better now, or is it still not?
It is that better. It is that better. Yes, we did.
Sure. So okay, let me just. Am I audible now?
It's better. It's better.
Okay.
It's still echoing.
Yeah,
So
Vidit, I'm getting an echo. Vidit, I'm sorry to interrupt. I'm getting an echo from your line.
Okay, I don't know. I hope this is better now.
Slightly
Yes.
better. You can go ahead.
Okay. So my question was around, is 50,000 units a break-even level, or do we become reasonably profitable after that? And two, I just wanted to understand this particular quarter, what has led to the increase in losses?
For this quarter. So I'll start with the later part. For the quarter, the rental segment has operated at a 9 crore loss. Sorry. Let me just correct myself. For the 9 months period ended December 31st, 24, the rental segment operated at a 9 crore loss, which we feel has consistently sort of declined, and will continue to improve this. The 50,000 rental units under management, like I said, will have 60% of them at an ideal state, which will have micro markets that are operating at a break even. There will be certain micro markets which we would want to scale. So tier 1 cities, once in control, tier 2 cities, we will focus on bringing on scale. And that's where we will probably need to sort of look at certain I would say losses.
Okay, understood. And just one last question on the REIT license. Once it is, given to us this quarter, what is the strategy going forward? How easily can we scale up the AUM year, and what is the target AUM that we're seeing over the next 2-3 years?
Hi, Vidit, this is Hiren here. So once we receive the license, or rather before that, we've already started working on our go-to-market strategy around that. Won't go too much in detail, but broadly we are looking at grade A commercial assets to launch them to start with. By definition and by regulation, already the size of the assets are more or less defined in terms of the AUM size per scheme. But from a growth aspirations point of view, in the next 2 to 3 years, we would be looking to scale up to an AUM of around 2,000 odd crores to start with, and then we'll look to see, based on how the acceptance of the product is in the market, how quickly are we able to take the schemes to the market, and based on that, we'll recalibrate our long-term aspirations.
Okay, and what channels are we looking to scale up this AUM via? I mean, what's our marketing strategy there? Are we signing up with certain wealth managers, or are we
You're not
relying on
very
marketing?
clear with it. I'm sorry to interrupt. This is the operator here.
So I think there's a problem with my line. I'll just get back into it. Thank you.
Thank you. We'll take a text question from Vimlesh Agrawal. The question is, one moment please. Hi, I want to know the reason why the company is not calling for the rights issue money from the investors, as the same will help the company to grow its business.
So the company, this is something that is as a roadmap we had decided in the very beginning of the rights issue, and that is why the rights issue was sort of done in a manner that it was supposed to be called in 3 tranches. We have done the first 2 tranches, and now the third tranche is expected to be done in the current to upcoming quarter. Having said that, I think the company didn't require as much capital till now, or actually, in fact, it doesn't even require as much capital as we are raising with the rights issue, because as you have seen, the losses kind of coming down substantially over the last 7 quarters. So it's not that we didn't call for the cost of growth; it was just not required. Having said that, I think rights issue final tranche will be called in this quarter.
Thank you. The next question is from Ritesh Shah, an investor. Please go ahead.
Yeah, hi. I wanted to check what are some of the benefits that we are seeing from the ecosystem of all the entire PropTech companies coming together, as Aurum PropTech is the only company which has such an ecosystem. So just wanted to see if we are seeing some benefits of the collaborative nature of it.
So there are actually immense benefits that we get operating as an ecosystem together. And I'll just give you a couple of examples to give you some color on it. What we spoke about using AI to generate new business models on existing businesses. So, for example, there are opportunities that come in where the Hello World's co-living business, which has got a good visibility on rental yields of co-living assets, which are typically buildings housing, student living and co-living apartments, go very adjacent to a business of SMREIT or a Cat 2AI, right? Where there's a rent yielding asset that can be put onto that platform. So that's one instance, for example. The second instance, for example, is how the Analytica and the Sell.do business, which both operate in the enterprise segment, have got good visibility on projects in launch phase on the enterprise side. So at an ABM level, it definitely helps for them to go to market. Also, they're able to work in tandem with each other. So if you see the project life cycle of a primary sale, post sale of a sale of a building, the consumer communication and the post sale process needs to be managed with cadence. So post Analytica's work of data analytics and lead gen is done for that project. It is backed up by Sell.do's business, which takes care of the entire post sales business of it. And assume in the same building, once the entire life cycle of handover is complete, tenants start coming in, moving in. Nestway becomes active and starts reselling or managing those rental units under management. So that is where the true benefits of the network effect of the entire enterprise and consumer tech should also come. So as we go quarter to quarter, we have been doing POCs on each of these consortiums in micro markets that we feel are prominently good for these.
Mr. Jain? Sorry, Mr. Ritesh Shah? Does that answer your question?
Yes, that answers my question. Thanks so much.
Thank you. We'll take our next question from Rahul Jain from Dolat Capital. Please go ahead.
Hi, hope my line is audible.
Yes, Rahul, please go ahead.
Yes, thanks for the opportunity. One question on this Hello World business, specifically about the Kota City. Based the info that you have shared, it seems the utilization continue to be pretty low out
I'm
here.
sorry, your voice is
So if you
breaking.
could share,
Rahul, can you just repeat your question, please?
yeah, hi, is it any better?
Yes.
Please go ahead.
Yeah, so my question was about Hello World business and the Kota City specific question that it seems the utilization here is pretty low. So if you could share the contribution of the city to the business and how we plan to mitigate the weak demand situation in that market.
So I'll answer this in two parts. One, as a I would say as a on the supply side, we have some 10% of the entire rental units under management spread in Kota, which is around 3,000 to 3,500 odd beds. To be specific, it's around 3,200 odd beds in Kota. The occupancy witnessed in this season with the present challenges is in the range of 57 to 60% in the city. So that is where the concern lies in. Whereas, just to underline or just to point out, in a good market, the city was operating at an 85% kind of an occupancy. This is last year, same season. So we will be optimistic on the city coming back to its previous quarters because we feel that student living as a business has got immense opportunity with around 40 lakh odd students looking to stay in co-living apartments or student living apartments. What have we done from a mitigation point of view? The teams that were managing or that were required to manage a capacity of a 75% occupancy in these cities have been moved to adjacent cities in the same I would say adjacent to these micro markets. So, for example, 60% of the team has, sorry, 30% of the team has been moved to to Indore, which has now, which is operating at a 77% kind of an occupancy, and that is how we were able to control the damage on costs and operations that was emerging out of this. I would say seasonal, but yes, macro challenge.
Right. And one more question on the light version of Nestaway. So we are seeing significant growth in this particular sub-segment. So is it any specific differentiation that we have in terms of operating metrics in this business? I assume, of course, the per unit rental would be lower, but in terms of commission rate or average tenure of occupancy, is this a more better business or slightly lower profile business compared to the usual Nestaway customer?
So, Nestaway Lite is a byproduct of our data analytics MIs that came in, where we saw that there was a lot of supply that was coming in as requests, which wanted to only do the rental transaction bit, which means the buyers the supply demand meet, transacting for that rental property, and then moving on. At least for that 1 year, they do not take any property management services that Nestaway's team would go on to add to their service partner network. And that is where Nestaway Lite was born out of. That where we latched on to that supply and did the transaction model, where a rental transaction is facilitated and the teams move on, whereas the relationship with the property owner still remains with us, and is then serviced for the next churn of the demand, or the next churn of the tenancy. Rahul, I hope we've been able to answer your question.
Yes, yes, that's pretty helpful. And just last question from my side, uh, if you could share any bit on Analytica in terms of how the metrics are shaping up in terms of customer addition or lead value or transaction efficiency. Any color on that would be helpful. Thank you.
Yes, definitely. I think, see, Analytica is a very is a very interesting business to us. Uh, from the time we added it onto our portfolio to now, it has been one star performer. The model is similar to the 99 acres and the housing.coms of the world, where they are in the lead sale business for primary real estate projects. What is different in their approach is that they use data analytics to sell the leads. Now, as a metric, Analytica has grown in number of projects this year from, I would say, Q1 to Q3 by almost 100%. We started the year at around 80 real estate accounts where our services, or developers rather, where our services were offered, and now we have almost doubled it in Q3. We are operating in more than 250 micro markets, which means those many number of locations are giving us, enriching our data lake and allowing us to offer more services in these. Cumulatively, we have in this year, YTD, been able to sell close to 200,000 leads in for the projects that we are sort of servicing. I would also like to point out that we've been able to also do two successful projects outside India with the model, specifically in Maldives, where with a large real estate enterprise, one of the top, which comes in the top five enterprises in the country. We were able to help them monetize their residential real estate project, a luxury one in Maldives. And we've got repeat business for that micro market. And now we are looking to also add some adjacent projects in that micro market.
Rahul, does that answer your question?
Yes, I'm good. Thank you. That's
Thank you. We'll take a text question from Shubham Dilavari from Value Research. Could you please outline the company's strategic focus in the coming years? Will it be more towards driving profitability or focusing on growth? If profitability is the priority, when do you expect the company to break even or reach a sustainable profit margin?
I think the way we have built this so far is we have tried to balance between profitability and growth. And I think as a overarching principle, we will continue to do so. However, we are seeing some of the products and their potential which can be grown exponentially over next 1 or 2 years. And we want to kind of allocate capital. We want to allocate more management bandwidth to these businesses and ensure that they do justice and get their required and desired revenue market share. So this is something that is a balance throughout the day, throughout the quarter, and I think we'll continue to do so.
Thank you. We have one more text question from Vimlesh Agrawal. Thank you very much for the answer. My suggestion is that the company should make expense in out-of-home advertising so as to gain more visibility among public, and this will help in acquiring the clients which are not aware about Aurum business.
Thank you for the suggestion, Shubhamji. We will definitely consider this, and thank you for participating in our sort of conducive observations. One thing that we always try to point out is that we have always had a digital first approach. Majority of our spend on advertising goes on to direct digital marketing, which is basically taking the brand or project or the product directly to the consumers, handheld or desktop-based digital device, which is a mobile or a laptop, right? Where most of the timeshare from a transaction from a discovery standpoint happens. Outdoor advertising or out-of-home advertising will give us definite brand visibility, and we will keep that in mind. We have done these exercises for the Nestaway business, which is largely C2C and does require that brand first approach, and we have done that for business. We will definitely consider this in the future.
To add to what Onkar is saying, as a company, as Aurum, we have always been product and customer centric rather than promotion centric. We believe that it takes longer for people to then identify and find you, but then your customers are long-term customers because they see more value in you. So as a philosophy, we have built businesses over last 3 decades with product and customer centricity rather than promotion centricity. But thank you for your suggestion.
Thank you. We'll take our next text question from Amit Agisha from HG Hawaii & Company. What is the current status of the SM REIT applications with SEBI, and when do you anticipate approvals? Could you share details about investor interest and funds raised under SM REIT so far? With EBITDA and profitability improving, when can we expect the company to turn net positive on earnings?
So first part of the question has already been covered. This is Hiranya. Maybe on the EBITDA profitability part, also.
So, on the EBITDA, we have now for last few quarters, we have started kind of declaring our ESOP adjusted EBITDA. And that has constantly improved to a point where it is now minus 2.4%, which means on a 70 crore revenue, it is 1.8 crores, approximately 1.7 crores. No, sorry, not even 1.8 crores. So in 3 months, 1.8 crores is not really a big sort of number for us to control if we have to. But the key also is to continue to grow at a 20 odd percent, at least on a 6 monthly basis, right? So while the profitability has been changing, while the profitability has been improving throughout, and we believe that we can turn the company net positive at literally at any point of time because of the way we have kind of brought down the profitability, brought down the losses in the company.
Thank you. We have a text question from Shivang B from MK. A clarification, you said quota occupancy decreased to 60% this quarter compared to 85% in Q3 FY24. Is that right? If yes, what exactly changed?
So yes, that's correct. Quota has been majorly hit this year. What has changed this year has been a certain negative, I would say, perception built over the last few quarters on these coaching institutes and coaching centers, and the gruel that students typically go through. There were very unfortunate suicides happening in some micro markets in across the country, with pressures mounting on delivering results for students. New regulations also, which were brought in, I think earlier or Q4 last year from the central policy making bodies, also impacted certain curriculums and confusions or perceptual confusions because of certain reasons. That these two three things have actually contributed to some headwinds in this business. But we feel that this is there are corrective actions that are taken at all levels, including specifically for student suicides. There's immense level of public awareness campaigns that are happening by institutions. We've also done a bit in this area. Parents are getting educated about what does need to be do as a proactive prohibitive measure, and on the policy making also, the policy making bodies are being more proactive in, I would say, bringing out clarification that at times are very very helpful for parents and alumni to understand their curriculum and so on.
Thank you.
Just to add to what Onkar said on this point, from our foundation, Aurum Foundation, also we are trying to work with the stakeholders of quota, just so that if there is any kind of contribution we could do in terms of education, in terms of bringing this issue to the forefront. This has nothing to do with our profitability metrics, but this we wanted to do since it's a very very strong cause that we can associate ourselves with.
Thank you. We'll take a text question from Sejal Ajmera from Crisp Idea. Which location do you see in next year to leverage your rental business and why?
So next year, we feel that NCR, which has built a good momentum over the last 2 quarters, will continue to deliver results for both the co-living and the rental business alike. Similar, and this is primarily coming in from, I would say, not just startups, but a lot of IT companies also shifting bases, looking at NCR as a good talent pool market. NCR offers a larger micro market pool for talent coming in from the northern India region, and that has attracted a lot of IT companies to go and set base there. The other regions that we feel will continue to sort of give good results is Bangalore, which is backed by an uptick in the GCC micro market, the GCC industry, which is largely the global capability centers of large enterprises, large IT companies that are setting base in Bangalore and other regions. Will drive more people to come and work here and also avail. the co-living and the rental, the family rental facilities. So primarily these two micro markets is where we see the larger demand coming in. The other micro markets are also quite promising and will continue to grow at the same trajectory that we've been witnessing.
Limitation here is not the TAM. The limitation here is how many micro markets can you really service profitably, and that is why we'll probably add few micro markets, and we will keep going more deeper into the micro markets that we are already present. Thank you.
Thank you. Next question is from Maitri Shah. Any guidance CAGR for the next 2 to 3 years and the company turning to net profitable? Can that happen by next fiscal year?
Thanks, Vishalji. Questions like these always keep, Maitriji, questions like these always keep us on toes and up and away, and make sure that we have continued focus on delivering numbers. We have grown consistently. So if you look at FY 23, 24, and now, I think we've delivered a 30% kind of a CAGR in the last 2 years. While we go into the next year, I think in next 2 years, with the existing businesses and also some inorganic nature of our strategy, we will look to double the revenue in the next 2 years.
Thank you. Give me a moment, please. This is next question from Shreyansh More. Any update regarding the call money?
So I think I think I'm hoping that the next call that we have, this question will no longer be required. So I think we have to work with that timelines, which we are already doing. There are many questions today on the rights issue, and we'll ensure that as we had committed in last few quarters, the rights issue process would have started within the Q4, which is JFM 2025.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I would now like to hand the conference over to Ms. Vanessa Fernandez for closing comments. Over to you.
Thank you, Yashashree. Thank you everyone for taking the time out to join us on this call. We wholeheartedly appreciate your interest in Aurum Proptech, and we look forward to having you all in the next call again. Have a good evening ahead.
Thank you, members of the management team. On behalf of Aurum Proptech Limited, that concludes this conference. Thank you for your participation, and you may now exit the meeting. Thank you.